Good morning and welcome back, guys. Yesterday the FOMC committee came out with a distinctively dovish tilt. This has led to markets to surprise. Gold was pumping, Bitcoin created a new all-time high, stocks were a bit lagging, and also FX market is going to reflect at London Open today. But if you don't want to miss out the moves next time, if you want to catch those big market moving events, hardcore economic and macroeconomic data and fundamentals into a easy to interpret narrative, I'm sharing my own positions every single time when I enter. Yesterday we traded live with the Alpha FX members and we were managed to catch 2000 pips on Bitcoin. We traded the Bitcoin all-time high. So once again, if you don't want to miss out the big moves, join the Alpha FX. Now let's have a look at the markets. Let's start with looking at the current positions. Now, this Bitcoin position was opened yesterday. You can see it was around 8 p.m. in the evening Central European time. This big, nice over 2000 pip move or 2000 points move, which created a new Bitcoin all-time high, was exactly at the time of the FOMC minutes release. Now, when the minutes was released, the markets didn't immediately react. This is the latest FOMC market or minutes. When it was released, the market didn't immediately react. It took about an hour and a half, so 90 minutes for markets to catch up and react. But we were already in position. Now, what I did is I used, of course, ChatGPT for the document, but I created a very specific prompt to my knowledge and experience of what areas and which lines to watch, because this is pretty much the same document every single time. But when analysts are looking at it, you don't have to read through the whole document. I know exactly which parts I need to look at in order to able to interpret the document. And as you can see, yesterday the interpretation was extremely successful. I caught over 2000 pips on Bitcoin, as well as gold. We had some very nice catch. I think it was over 200 or 300 pips, but yesterday's gold positions are now closed. I did enter or re-enter into another position today. I'm going to talk about it later. Now, if you don't want to miss the next big move on the market, and if you want someone, if you need help from someone to translate hardcore economic or fundamental data, like in the economic calendar, go to alphafx.eu. There's currently 3 spaces left, 1 monthly subscription, 1 pro lifetime, and a premium lifetime. The only difference between pro and premium is that premium comes with personal mentoring, so you can message me 24/7, and 3 hours of mentoring is included in the price. It's a one-on-one session where I help you to whatever you need helping with. So I recommend the £199. If this runs out, if the last one is sold, no more joining. A new website is coming and you can join for a fixed monthly fee, and the lifetime fee will be around £699. Let's start the market analysis. So looking at the gold chart yesterday, you can see this was the entry plan with the guys when we traded live the FOMC meeting minutes, and we managed to catch this move, which accounts for about 200 pips. Now you can see that price successfully broke out from this channel, but it doesn't mean it is broken out because we don't have a 4-hour candle closed. Now I can see 2 possible scenarios for gold today. The first one, if we have a no tariff agreement, then we're going to have a pullback into the channel. And now talking about the technicals, because I talk a lot about macroeconomics and fundamentals, but if you're interested, I can explain to you why this position is viable, and you can go to Discord where I share all my macroeconomic insights. Now, the first position, if we have a no tariff agreement, because right now the market is currently moved by the tariff agreements or the trade war between the US and other country parties, and currently Trump is negotiating with multiple countries. For example, Trump threatened to impose a 50% tariff on Brazil. That is absolutely insane. Of course, he's using this bullying tactic to negotiate a 10 to 20% deal. Now, in case if we have a no tariff agreement deal, then the market is going to push significantly higher. In case if we have a tariff agreement, I think the market is going to push back into the middle of this descending channel, but I think the downside is capped at $3,300. And from this point, I would be looking to buy the dips. Yes, you heard it right. My strategy is cautiously bullish and I'm buying the dips. What is going to happen right now? I think that the market is going to pull back to the weekly pivot. So if you are on a lower time frame, you have about 80 to 100 pips. So if you sell right here at the current position, price could pull back to the weekly pivot, and this is what I'm expecting. If you want more specific entries and signals like this one on Discord, this is a GBP USD trade I sent out this morning, but also you have gold trades which I sent out yesterday. That is the kind of signal that I send out with stop loss and TP before or at when I enter into a position. If you want these kind of signals, go to alphafx.eu. And this isn't just a signal. I make sure that I explain everything very thoroughly from a economist perspective. I'm a macroeconomist. I studied this. I've worked on fixed income and cash equities desks on the trading side, on the buy side, not the sell side, on the buy side. So I make sure that I explain everything thoroughly why I enter into a position. But if you're not interested in that one, if you want to follow signals blindly, be my guest. Here it is. So if you want to join the AlphaFX community, go to alphafx.eu. So I explained gold. Let's talk about Bitcoin. Now on Bitcoin, you can see that I'm still running a 1,900 pips profit on gold. But is Bitcoin going to make a new all-time high today? Well, yesterday it almost did. It did go above 12,000, but it failed to close above 12,000. So my expectation on Bitcoin, if the current market trend, if the current market sentiment continues to dominate, for example, if we have a tariff agreement, that's going to be very beneficial for indices, for Bitcoin. So if you have a tariff agreement, you can expect Bitcoin to create a new all-time high. But the same is true for NASDAQ, because Bitcoin follows US indices, trust me, since the arrival of ETFs. So what I'm expecting, going back to Bitcoin, is you have this green box, which is a buying zone that you can see, and I'm expecting price to pull back between 110,000 and 109,000. I set an alert, actually I'm setting an alert now, just in case the price pulls back, I will be buying the dips on Bitcoin. The same goes for NASDAQ. NASDAQ has the most or the highest potential for new all-time high and the highest bumps. But if you look at the volatility, then Bitcoin is definitely the king of volatility. And if we manage to position ourselves right in indices with the long, exactly the same scenario, then we can manage to catch exactly the same move on Bitcoin, but with greater volatility. So the profit potential for Bitcoin is definitely higher, but NASDAQ is safer and easier to trade with less leverage or less margin. So going back to NASDAQ, what I'm expecting, price could pull back to this green box, which is kind of like a liquidity box, as many traders say. But what if you miss out? I would just use a bit wider stop loss, or maybe even a short stop loss, and just buy the dips. So I think the current price point at 22,000 on NASDAQ, 22,842, is a very good opportunity to buy. But maybe the profit target should be always the previous high, then 23,000, and anything above 23,000 is a bonus. So yes, I would go long on NASDAQ, or I'm going long on NASDAQ because I do have exposure, or will have exposure soon. Bitcoin, I would wait for a pullback, then re-enter. On gold, let's have a look. I'm bullish on gold, but cautiously, because when you look at the global yields in the market, then when yields start to go down, because the Fed already announced that they plan or welcome interest rate cuts in form of the FOMC Open Market Committee minutes. So they announced that they welcome the interest rate cuts. That's going to be the end of gold. Gold short, sorry. So gold could go higher because of the welcoming rate cuts. But the problem is that when you compare gold with indices or Bitcoin, they have much more significant potential because they are risk-on assets. And when interest rate starts to come down because the welcoming of the interest rate cuts, gold will be in the background, and I will be trading Bitcoin and indices. That's going to be the beginning of the highest rally this year on Bitcoin and indices. Don't forget that Forex is offering a 75% deposit bonus if you use the code AlphaFX75. Link and description below the video. Once again, if you want to join the AlphaFX community, go to alphafx.eu and become a member today. Thank you so much, guys. Hope you enjoyed the video. Make sure you leave a comment, please. Thank you. This is the AlphaFX.